All right, guys, here's another free video. I'm going to show you exactly how we called the absolute bottom after calling the top yesterday. All right, so I provided another video yesterday showing how I was able to predict the sell-off in Powell. And it's pretty funny because while Twitter is screaming the sky's falling, we actually got long, and I'm going to show you exactly how we caught the bottom. So yesterday I alerted the QQQ 1113 371 calls at about $1.59. We took them for about 105% return. Okay, but the alert alone is useless. Let me show you why. So in my private Twitter feed, I said, I think we just saw a bear trap. Reason being was we had liquidity taken below 370.62 and we tapped into a higher time frame demand zone, right? Which was my like 369.80, 370 level, okay? I also said that we had a wedge forming into my buy zone as well. I was looking for a pop into today around to about 372.25, around there, okay? Looking for a rally to come, all right? So I sent my alert out yesterday. You can see it right there below. And let's go into the chart and kind of show you the premise behind the trade. On the daily chart, you can see that we had this nice rally-based rally demand zone, okay? On the daily chart, okay? You can see the actual structure right there. This structure can appear on the millisecond chart, on the 5-second chart, on the 100-hour chart. Essentially, we are just looking for some type of basing action, right? So all I'm looking for is the market to make a strong move. I want to see some type of pause, right? And then I want to see another move like that. Doing so causes a break of structure, making this a strong low. So the setup just comes like this. This was essentially just the premise of the trade, right? We get this, right? We get our structural break. And then I want to look for some type of inducement or liquidity generated above my zone. Seeing early long stepping in, a little premature move. And then I want to see that swept and actually meet our higher time frame POI. And then I want to see the move actually happen. Okay, so now that we have our daily zone drawn out, you can see exactly how I drew it out right there. Let's go on to the 15-minute chart, kind of show you what I was talking about here. All right, on the 15-minute chart, you could see that we had liquidity generated above my zone, right? We had early buyers, they get stopped out, and then we finally meet our level of demand right there, guys. 370. We exploded up for about $4.50 for a huge winner on our calls, okay? And that was exactly how. Think about this for 1 second, okay? You have early longs getting in the market, right? Placing their stop losses below the lows, okay? But then look at what happens on yesterday's sell-off, right? We actually sell off, so take liquidity here below these lows, penetrate into our demand zone, right? I also noted this nice wedge forming into the zone like that, okay? And just a huge pop, guys. Huge pop. And that was exactly how we were able to catch the low. This is why incorporating concepts of liquidity is really key, and it's also why it's critical that you are being mindful of the higher time frames, because while let's say the 15-minute chart might look bearish, this might just be a pullback to a higher time frame imbalance, right? Because the market moves in cycles. That's why it's important you are not just glued to your 5-minute chart, 1-minute chart. It's important that you do a top-down analysis just to kind of see what the overall trend is and to be able to identify those higher time frame POIs.